Happy Thursday, everyone. How are we doing this fine morning? I'm assuming you guys can hear me. It looks like the mic's working, screen's working, should be good there. We'll see if Dave joins us. I believe he is. Good morning, Greg. How you doing? Good morning, Brian. Good morning, Andre. Lieutenant Torres in the house. Good to see you, sir. Good morning. Good morning, Voltaire. We did it again. Good morning, David.
Hit the button at the same time.
Shankar, good morning. Hisham, good morning. Got a busy day. Dave, you got a fellow New Yorker in the house. Meet Lieutenant Torres. He's with the FDNY.
Yes, I know Eric.
You know Eric. Good job.
Yes, I do. Good to see you here, Eric. Isham, good morning. Voltaire, good morning. Mark. Well, didn't we have a lot of interesting news about yesterday, huh?
Yeah, quite the day there.
Oh, you're welcome, Eric. I wish I had a tank, actually. Great to have one in my front yard. Yeah, interesting. So we had, boy, we'll wait a couple minutes here till everybody comes in, but what a neat setup for yesterday. Unbelievable. First rate cut since the 2008-2009 financial crisis, and the market did not like it.
I thought it was interesting how the first drop, when the report came out, they're like, okay, we'll come back up. And then he talked. And then it really went down.
Mm-hmm. Yeah, unbelievable. I think he hinted that it was one and done. And, well, he didn't hint at it. He actually kind of said that. I think we're going to do just one.
Which is interesting because then you read reports saying that there's a possibility they'll do it again. So it's like, where do you believe it?
Well, I think he retraced a little bit. I didn't hear the entire speech that he gave afterwards, but I think he retraced a little bit and said, well, let's take a look at the conditions in October. If October is not good, then there could be more rate cuts coming. And that kind of set off the market.
Hmm. Good morning, Isham. He's on the road. At least you're still hearing it. Good job.
Yeah, so I think he was a little bit vague in his responses, and that's why the market kind of sold off. I mean, that's kind of the excuse. I think a lot of traders were right on the edge of the market anyway. They were like, this is the first rate cut since 2008. Why are they cutting rates now? A lot of people were saying that. I mean, I've been listening to the talking heads on CNBC and Bloomberg now for the last 6 months, and they've all been saying, hey, we should have been at 5, 6, 7% already. But, we're at 2.25, 2.5. So they knew that the economy wasn't doing that great in the beginning, and now they're doing a preemptive rate cut for something that they see coming down the road. I think they realize that, hey, this the economy we know is probably ripe for a pullback. I mean, the European Union already is kind of in a very precarious situation. A lot of countries have negative interest rates, and there's a potential here. I mean, I can't imagine negative interest rates in the United States. It just blows my mind. But it's possible. If we get a deep enough recession and they need to cut to 2 basis points, we're going negative.
Which is why they're probably already priming people for the idea.
Maybe.
You get them used to it, then it's not such a shock when it happens, right?
Yeah, I think they could lower rates. I mean, just think about it. We've been in a recovery now for 10 years, and we're still at 2.25% interest rates.
Yeah, how many decades does it take?
Yeah, it's. I mean, we get any kind of a pullback in consumer spending, and the economy goes into some sort of a tailspin downward. It just doesn't look good. I think he's really between a rock and a hard place with interest rates. I mean, I know that they didn't want to raise them because of all the debt they have. I mean, it's like borrowing stuff on your credit card and the rate goes from 9.5% up to 16%. And you're like, what? And
more then, right?
Huh?
Then their answer is borrow more.
Yeah, exactly. So now they don't want to raise rates against themselves. So I understand why they didn't raise rates maybe as high as they wanted to. Somebody made an interesting comment that Trump wants lower interest rates because he's made all his money on borrowing money. He's only borrowed money for the last 30, 40 years as he's been running his real estate business. So he likes lower rates, of course, because he borrows money to make money. But it's really penalizing the baby boomers at this point who are retiring. 10,000 baby boomers a day are retiring, and they want something on their savings and they can't get it. There's just nothing there. So their only alternative is to go into short-term notes, to go into maybe longer-term debt, longer-term notes and bonds that will give them a higher rate. Some people say that's not enough. That's like 2.5%, 3%. So, go into junk bonds. Now you get 6 or 7%. Now everybody's jumping into junk bonds. As soon as the economy falls apart, they're the first ones to drop. Good morning, Anorg.
Yeah, what happens if the recession hits? Would they bring up the rates? Well, they can't really, right? Because if it gets recession, they raise rates. That's the double whammy.
Yeah. So what happens is that the idea is that they lower rates in order to stimulate borrowing, and they wouldn't raise rates in a recession. That would create a depression. So they lower rates with the idea that it stimulates investment, borrowing, capital expenditures, that kind of stuff. So they would never raise rates. And the only time that they would raise rates is if the long-term rates start moving up much, much faster than the shorter-term rates. If that were to happen, then the Fed does have to catch up. They're going to have to increase those short-term rates to catch up. Otherwise, there's going to be a huge gap between the short-term rates and the long-term rates, which creates an arbitrage opportunity, which I don't think has happened very often. I'm not really up on that. But I know in the 70s, when interest rates went up to like 16, 18%, that was kind of happening. The shorter term rates were kind of slow in keeping up with the longer term rates, and there was some arbitrage opportunities there for traders to buy the shorter term and short the long term. And it kind of created a little bit higher inflation than they wanted. But imagine going into your bank account and depositing money and getting 16% on it.
Wow. Yeah.
I mean, that would be awesome. Thank you, Anorg. I appreciate that. But anyway, now, of course, you get nothing. You get nothing on your interest.
Well, yeah, think about the opposite, right? Can you imagine going to put money in the bank and they charge you money to keep it there? Negative.
I don't know how people in Sweden and I think it's Norway and Denmark. I guess they just don't. They've gotten totally away from. I think they're basically a cashless society at this point.
And do they have too much money where it doesn't matter to them?
If let's say that happened here, what would you do if your bank says, "Hey, we've got a 0.25% negative interest rate"? Number one, they're not gonna advertise that probably, right?
Right.
Oh, we can give you a loan for 3%. Yeah, they're gonna lower their rates on loans, and they're gonna advertise those. They're not gonna advertise their deposit rates, obviously. But what would you do if interest rates went negative in your bank account?
Yeah, I would think I'm going to take any money that's in an account that has a negative connotation to it, and I'm going to ask them, well, where's the account that has 0 interest rate? I don't care if I'm not making money. You're not going to charge me. If you don't have that, then I guess I'm just going to withdraw my money, right? And that's just going to cause a run on the banks.
Yeah. And so what would you end up using your accounts for? Even if you got 0 interest rates, you got, nothing on it. What would you use the account for?
Well, you figure you'd have to have at least just your one regular, pay your bills accounts where you don't care if you're not making money on your interest because it's just coming in and going out for your monthly bills.
Exactly. You just use it as a utility, basically.
Right.
So you're going to pay your credit card bill. You're going to pay your heat and electric with it. You're going to pay your other bills, mortgage or whatever you might have, but that's about it. So you're just going to deposit enough to make it work for you. But nobody's going to save anything. There's no reason to put money in the bank unless you're paying your bills. So people would keep it. But that's one of the reasons why they're basically going cashless. They're kind of transforming their economies into a totally digital economy because they know that then you have really no choice. You'd have to keep whatever you had, even if it's digital money, in the system. Because if you had cash, then you're not paying the negative interest rates on the savings. V says, could you explain how you would day trade this using bell curve in the 5th column? Yeah, so maybe Dan can go over that in a few minutes. But I think this federal interest rate deal, lowering the rates is, and then Trump, of course, comes out and bashes Powell for not saying that we could end up doing more rate cuts. This is getting interesting, guys. Really interesting. All right, Dan, it's all you.
So I've pulled over the 4-hour, the 5-minute, and the 1-minute chart. First comment, Via, and Eric, I do see your comment there too as well. Yeah, we're absolutely at a 0.5%. So if anybody's in a short, definitely be taking your profits because we're at the bulk move for a day, right? But you said here, could you please explain how you would day trade this morning using the bell curve in the 5th column? I just want to set the stage of making sure you're understanding how we use the indicators for the 5th column in the bell curve. So I'll kind of go over that. So we start out without knowing what's going to happen, right? So if we come back here, that's where we look at our biases, right? And Eric, this leads into what you were saying, where yes, we were definitely trending down. So we were expecting an up move, which is exactly what the TSA had. But we also had a high caution on it and high volatility potential. We'll get back so I can't see you. There we go. Because we did have a little bit larger than normal. If I mouse over these, 0.1, not super big. And we had some retracements, but we do definitely have a down bias, or excuse me, a downward move for the overnight session. So expecting a reversal based on probabilities. And if we look at, let me pull up my, there we go. And we went from a -2 to a 0 on the spreadsheet, which is also an up bias. So we had a lot of things. Everything was pointing towards up, but we had a lower probability based on volatility and caution because we could have a lot of up and down action. So how we use the fifth columns I use personally, not for entries. I only use it for exits, which I know we've talked about a few times, but I know V, you're newer to the room, so I'll just hit that again. And then also we use the bell curve oscillator for how we time our entries. So the bell curve oscillators for entries. Fifth column I personally use for exits, because we'll see exactly how that works there. So if we're looking for a long here, we had an up bias. With caution, we're watching the bell curve come into the open. Here's 10 minutes before the open. And there isn't any really well-formed bell curves prior. So that's kind of a clue saying, I might not like this because we don't have some good formations happening before. We had a little bit of activity started to happen prior to the open on the 1 minute. But again, that's a big chop. That's not a well-formed bell curve for sure by any means, right? So that would give me reason for pause to say, okay, I might not want to take my open right away. If I did, if I was, more on the, I don't have the spreadsheet mark, but because mine's busted right now, as you guys know. But we'll definitely talk to that. So here, if I did have my up and I wanted to take in, I would be entering about right here where this stopped. But then right here, I would see this did not continue, like the 1 minute before the open. So this would probably be more cause for pause for caution to say, hey, this isn't continuing. We should probably take what small profits we have because I have higher volatility today. So we're looking at the bell curve. Then the open happens and it definitely goes against the trade that we're looking for an up. So that's where you're exiting before your mental stop loss is breached. Grab a coffee here. I did have one client who's 4 for 4 for this week let me know. He's like, yep, I had my bias of up as well. And he saw it go against, and so he actually took the short. So that made him 4 for 4, and he's averaging like 250 a week, or 250 a day this week on the vol arb trade, which is exactly what happened. So looking at the bell curve oscillator here, I have to tone it back down, and same with the fifth column now that we've had these large movements. This was kind of the opposite of yesterday, where we had a huge move in the first 5 minutes. Yesterday was up, today was down. The fifth column here has definitely been breached many times. This is an extreme day. It typically does not happen like this. If we look at both the 5 minute and the 1 minute, so I'm using the fifth column. If I'm in a short, once I'm breaching these, I'm exiting and I'm taking my profits because I've hit my profit goal for the day. Or at the worst case, I'm taking everything and maybe leaving one micro on just to see if it continues. But I wouldn't leave any full contracts on. I'd exit my positions based on my rules. Take the money when you get out before it goes too far against you, play the long game. You're not going to squeeze every ounce out of it. So that's how we would use these to day trade this around the open. And then we see it obviously kept going. And then once it did stop, it did reverse back to the upside for a short bit, but there's just too much pressure to the downside today where it's continued down a little bit further. And someone had mentioned that if I pull up the daily chart over, if I get that out of my way, we'll see where that's showing for the day. Yeah, right now we're at 0.81 on the day already. So it's almost a 1% move. That's huge. And let's see. Lots of comments while I was talking there.
Yeah, Norg says that later in the day, I will share with you an excerpt of a private newsletter of Bill Bonner. Your views are exactly the same. Bill charges $199 for it. All right, Norg, I do accept PayPal.
Here's a button.
Yeah, here's a donation button. Bill Bonner is an interesting guy. He's a number one. He's a fantastic marketer, but he's also a very, very intelligent guy, and he loves investments as well. He started, what's the name of his company? I forgot now, but it's in Baltimore. And basically, to start his business, he ended up buying a building in Baltimore that was really run down. and part of the urban renewal agency in Baltimore project area. He got it for $1, I think, and he ended up putting a couple $1 million into the building to restore it. So he's kind of a very, very interesting guy, and I love to hear him. I do not subscribe to his newsletter. I probably should, but that's interesting to know. He's a very, very sharp guy. Mark says, Dan, can you show the spreadsheet? I think mine is way off. Nurg also says, Dave, today M1 was indicating an up opening, though the bell curves are saying differently. Entered at 931 with a short and exited at 940 for a vol arb profit around $500. Nice job. Really good. Excellent.
That's how you do it.
Yeah, you could tell as you were getting towards the open there, the bell curves were, yeah, they didn't look good at all. They were definitely going down, but the only thing that gave us a downtrend today on the spreadsheet was the trend column. It went from a 1 to a 0, which is a negative trend. Everything else was up. The only reason that we included the caution on the volatility, the up-down action on the spreadsheet or on the open was because if you look at the 1 minute chart again, look at right around between 8 and 8:30. I think it was between 8 and 8:30. Yeah, right in, no, a little bit farther. 8:15, I guess your time then. No,
this move?
Well, that was part of it. That was pretty volatile. And then there was another one before that.
Yeah, that's 9:15 for you. And then here's another one right here.
Yeah, just before, when I was doing when I was taking a look at the period between 8 and 8:15, 8 and to 9 o'clock, there was a period there that was really volatile. It was up and down quite a bit. And so when I looked at that, I said, yeah, there's probably a good possibility of a volatility at the open there. That 1 o'clock is informing us, I think, of a couple different things. Number one is if the open's going to be volatile, and number two, that might also indicate, which direction it's going to go in. So I'm paying a lot more attention to that 1 minute between 8 and 9 a.m. Eastern time. And look at that volatility just before the open too. You can't see it on that scale, but it's really a lot more volatile than it looks.
Yeah, that really dropped.
Yeah, that dropped just like a rock.
I mean, what is that on the 5? That's a 0.5% move in 5 minutes.
Yep.
That is not common.
Well, that's why Nerd made $500.
Exactly. Or Shankar did.
Yeah, he must have been using the full YM and NQ contracts.
Yep, that sounds like a single contract.
Mm-hmm.
I am not using the Renko Cloud for vol arb at all, Mark.
Shankar says that he entered and exited at the same time, did 524. That's good. Mark wants to know if you're using the Renko Cloud with the vol arb.
I have not been. I was trying to think, did I put it on? The only place I was using it, or we kind of look at it as more the swing style, I haven't used it for day trading at all. Let me see if I can find that chart. I get too many charts, and I know I was gonna still on my list, guys, for creating workspaces. Maybe I need to do it sooner than later because it's out of control.
Also, if you want to bring the spreadsheet back up, I updated both the charts in there too, and I want to kind of point something out when you're ready.
Sure.
It looks like we're getting the snapbacks, at least so far, that Market Timer mentioned last night. The Dow's up 140 points. Yeah, go over to the correlation. Yep, that one right there. So every time we have gotten really, really high, on the correlation. You can see 3 peaks there going back on the Dow versus the NDX. They've always come back, and we're getting another one right now, which is the 4th one there. Really big separation between the Dow and the NDX. And I don't know if any of you guys remember, but TOS used to have the profit charts.
Yep.
You guys remember that? I know Dan does. Anybody else, any of you guys remember that at all? And those were fantastic for determining on a 60-minute chart the difference between the Dow and the NDX on a cash basis. It was a great indicator for determining which one was outperforming the other. Yep, from Greg, that's right, from HLM1, absolutely. They have they've taken the profit charts off of the TOS platform now, which is a shame. The developer of the profit charts, I can't think of his name right now, he has a website, and he said he was going to come out with an independent version of the profit charts. I haven't seen him develop that yet, but that was a great indicator. I really liked that a lot. So this is kind of a replacement for that, although it's not on a 60-minute time frame. It's on an end of day, but it certainly shows the separation between the two. And then if you go over to the trend sheet there, you'll see that right at that 3.4 level on the cash Dow index ratio is typically a pretty good support level. And so, after this morning's decline, I'm guessing that we came right back down to that 3.4 level again, and we're probably going to be ready to bounce off of it. So this is not investment advice, of course. Personally, I'm looking for a long swing trade here. I'm gonna take a long position in the YMNQ trade because it's bounced off of that level. You can count the number of times: 1, 2, 3, 4, 5, 6, 7, 8, and 9. So I'm guessing that is some sort of level that institutional investors are saying, hey, there's a arbitrage opportunity between the Dow and the NDX, and they are taking long positions when it gets to a certain level. And so they're going to be buying up the Dow and selling the NASDAQ at some point here.
Compare and toss, is that, I'm not familiar with that off the top of my head, Mike. Is that a tool that they use for?
Yeah, there's a tool in toss that you can do that with. It doesn't work the same way though, because what it does is it changes the scales. I haven't used it in quite a while, but if you go to open up a new window, maybe.
That's what I need, is more windows. You want a flexible grid, or what do you want?
Yeah, flexible grid's fine. Any of the windows will work.
I'll grab one from over here.
Norik, where do you get the Dow NDX ratio chart from? It's actually on the spreadsheet. It's a tab. If you look down below the spreadsheet that you download from Tradingology in the download areas should have the tabs down below, and you'll see those down there. Yep.
There's the SLV DBC one that I was fixing, actually.
Holy cow. Is that fixed now?
I believe it is. I'm not 1,000% sure, but I did find the same formula in one of the hidden columns that was affecting the original NQ, but I haven't found what affected mine from yesterday and why I had a different number.
Yeah, that had a bit of a blast off there. Look on July 16th and 17th and 18th.
Yeah, just went crazy.
That's a massive move in 4 days. And I believe it was SLV really started to take off. Gold has been going up as well. I'm not sure what it's doing now. But that may have been in anticipation of the sell-off that we saw yesterday.
That's why I was kind of surprised at how much movement there was yesterday, because it's typically built in before it happens and it doesn't have that drastic of a move. So that kind of surprised me.
Yeah. Yeah, usually it doesn't move that big. I mean, that's a, let's see, you got 2, 2, 4, 7, almost a 10% move there in the spread in like 4 days.
Yeah, here's the chart on, there's that blast off.
Yeah, that's crazy. So that was, and so that was just like 16th and 17th, and today, so it's about 2 weeks before this sell-off we had yesterday of the rate hike or the rate cut. If you want to show those guys real quick how to update the trend
Oh, sure.
and the correlation.
So what you do there is, so right now, you look at what line you're on.
Yep, 1156.
And when did I last update this one? So this was, I haven't updated this one this week yet because I don't follow this one every day because I'm too darn busy. But yep, look at what line you're on and come over to the trend. Then this draws up and you go into select data.
Yeah, you have to select the chart, otherwise it won't. That select data is hidden unless you actually click on the chart.
True, true. Yes, once I go in there. So yeah, if you're, and chart design is the tab that it's into if you're looking inside of Excel.
Yeah.
Then you have to update this line. So come back and say 1156. It'll probably only be off by like 4 or 5 for you. But here's now that's updated that ratio. I don't do this one as often because at SLVDBC I haven't looked at the trend like we do the YMNQ.
Mm-hmm.
But you will see that. I think there is one sheet that doesn't have it. I don't recall the reason. But if we pull up YMNQ as well, you'll see that'll be the one that you're updating more often. Same thing goes with the correlation. So going back to the grid, so here we're at 1159. He's probably already got it. Chart design, select data, 1159. See, Dave's already got it updated. Same thing for the trend. So you'd have to go into each one. Just make sure in chart design, select data, and only like don't, like if you happen to wipe all that out, oops, don't click OK, click on cancel. Then worst cases, you can always just not save your file and close it and reopen it. So there you go.
Yep, good, good.
And going back to our original thought of compare, I'll just pull over a Dow chart that I whacked up and you tell me where to drive because I haven't played with compare.
Yeah, so I think what you do, you just need the one chart. You can
only one, okay.
Yeah, you just need the one there. And then what you do is you go, I haven't done this in a while. I have to think about how this is done.
Hit the beaker and look for compare. Oh, it's a study.
Okay. It's not edit studies though, is it? Maybe it's in there. Do a search for compare. Comparison. There it is right there. Okay,
person. Line SPX. So you can, here's where you can adjust it for.
Yep, go on the tools.
So let's do this. Let's change this to MDX.
Yep.
You can't let me type.
There you go. And so what it does is, I think the issue is with the, yeah, so you get a line for the second one. I'm not sure how to change that either. But if you did lines for both, so check a line for the Dow. No, it's in style. It's in style.
Oh, so, for gotcha.
Yeah, just instead of the bars. No, it's in the, yeah, well, you can do that too. Yep.
More than one way to skin a cat, right?
Always a way around it. And then go to a 60-minute chart, which would be a 1 hour if you got that set up. Yep, there you go. So this is the way we used to do it with the profit charts. We do it on a 60-minute chart. And we take a look at the separation. Well, I mean, that's not too bad, I guess. you can still see the separation there, and you've got the NDX way above at this point. And so we expect the Dow to catch up to it. Now, if you go back to, it looks like last Friday, look at last Friday.
Oh,
man.
This is going to goof it up.
Yeah, see that? Yeah.
That's the tricky part.
That's the tricky part. Can you adjust the other side, the left scale? Yeah, you can do that too. So yeah, that's kind of the tricky part, because based on where you adjust each of the scales, you're going to get a different view of the ratios and the difference between the two of them.
Yeah, and I can't move the chart either. If I drag anything, it only drags the one.
Yeah. See, with the profit charts, it was fixed.
It locked it in, right?
Yeah, they both started at the same point on the left side of the scale at the 0 point, and then you couldn't adjust the scales to like you can here. And so what it did was it created a fixed point on the left side of the chart, and then you could tell which one was, outperforming the other very easily just by looking at the chart. And then when they got too far separated, you'd say, okay, yep, whichever one was underperforming was going to catch up, and the other one was going to decline in order to close that gap on the difference. And so it was a lot easier to actually, visually see which one if you should go long or short the spread. Now, stock chart, I think it's stockcharts.com, also has a facility where you can do comparison between two instruments. And that's somewhat helpful. I think it has a little bit more controls, and you can use that for free. Brian says, what if you use the percent change instead of price? No, we could take a look at that too. I'm not sure exactly how to do that either. Haven't used that in a while. Brian, you know where to do that, to make that change? Mark says there's an easier way. Look at the quick study on the drop-down menu.
Price access, okay. We'll jump back over there.
Oh, show percentage. There it is right there. Show prices percentage.
Well, it just changes the number, doesn't affect the line.
Yeah. And it only changed one side?
Yeah, it only changed the chart itself. It didn't change the compare, unless it's in the study.
Yeah, maybe you can adjust that in the gearbox there. Nope, doesn't look like you can change that either. Can you open up the code? Let's see if there's a code. No, it's locked. Yeah. All right. Well, and so Mark says quick study on the drop-down menu. Which drop-down menu is it?
I don't know if he was just talking
that one.
Just right-clicking and going to quick study.
Quick study.
It's another way of getting to the studies, right?
Yeah.
It's just like Windows. There's 18 ways to do the same thing, right?
Oh, so you just go into the comparison from that angle. Okay. Well, in any case, it doesn't work the same as the profit charts did. If you got a browser open, you can go to stockcharts.com.
Yeah.
Yeah, they do that as well. I think that's another one. But yeah, I'm really disappointed Profit Charts never actually came out with anything, and they eliminated.
The funny part too is that they actually some people had access to it still. But it was like, what are you guys doing, playing games?
Yeah, what happened was they took it off of my TOS platform, and I contacted support, said, hey, can you add it back in? And they said, yeah, we can add it in for a couple more months. And then I noticed a couple months ago it was gone.
Do they call it compare? What do they call it in here? I haven't played in these guys in a while. Looks like they definitely changed their
Oh, yeah, they have. Wow.
layout around.
Well, they've updated everything here. The RRG charts are actually really fascinating. I love those things. I haven't looked at those in a while, but I never really got much value as far as trying to determine a trade to get into.
Watching the rotation spin, yep.
Yeah. So the developer of the profit charts, he has a website called slopeofhope.com. And it was in April 2017 that he did an update, and I'll put a link in there for you guys. He said he was going to come out with a new one, but I haven't seen it yet. So anyway, that's something for you guys you can use to follow up with. So yeah, let's do a normal chart.
Which one is, how they, I don't want the service index.
Yeah, do an INDU. See if they do INDU. DIA. Well, no. But we may have to go with the diamonds. Yeah, I'm not sure what their symbol is over there for that. Let's just do the diamonds for now.
What is this, comma, I think it was?
Yep, comma.
Go.
So, I mean, that's not horrible. So this was kind of like my backup to the profit charts because they do begin, the left side of the scale on the left side does start at a zero line. So you have a pretty good indication for the time period of the chart of where there's one is underperforming the other, one's outperforming the other. And so that's that. I would use this. Now, what's time? Is that a daily or is that can you adjust the time frame for that? Looks like an end of day.
200 days total.
Oh, click on that and see if you can change to a. Yeah, those are kind of cool too, actually. Those are kind of nice. So when you have a lot of instruments in there, it's pretty cool. So click on that 200 days. No, don't drag it. Just click on it.
Why not?
Yeah, you want to get us all dizzy. Just click on that 200 days. I think you can change.
It doesn't do anything if I click on it.
Really? Right click, left click, nothing?
Oh, there we go.
Well, I guess it just changes the days then.
If you want to change the number of days, is all I can do.
Okay. Well, they've changed this around. But anyway, that's kind of the idea. When one is underperforming the other and you can shorten up the days, you can extend the days. At least you can get it on a daily basis. Maybe if you're a member, you can go down to a 60-minute chart. That's also helpful. The RRG charts are kind of interesting because they show you the rotation of the different instruments. I don't know if you guys have ever seen that. If you're an HOLM1, you saw it. And I think these guys, there is somebody who's doing RRG charts, but this is the easiest one to use that I found. And you can take out, yeah, that's what they look like.
Whee.
And so they go from lagging to improving to leading to weakening. And yeah, you can uncheck the visible column for some of those.
What do I want to take out here?
Oh, there it is, $ INDU.
Aha.
Take out the Amex composite. Take out the CDNX and the TSX. Yeah, there we go. So you got those three anyway. As a member, you can add other ones. You could probably add the Russell 2000 in there. But let's take out the NYA2 and just do the composite. And now run it. And
So
I think
Dow versus NASDAQ.
yeah. So you can see that the Dow was underperforming. Now it's starting to outperform. It's going from that improving quadrant to the leading quadrant. And the composite, it looks like it's still in the weakening phase there. And typically what it does is it goes like a clock. It goes from the improving to the leading to the weakening to the lagging to the improving, and it does that on a pretty consistent, regular basis. So if you run this, you can kind of tell exactly where each one of the instruments is in that in which quadrant they're in. And right now looks like the Dow is improving and the composite is weakening, except for today.
Yeah, it's definitely made the full circle there. I'll hit it one more time where it's
Yep.
just about ready to come back the other way again.
Yep. So it's improving a little bit today, but typically what it does is it goes from weakening to lagging, and then improving and leading and all the way back around again. Pretty interesting way to chart it. So that's another good indication and kind of confirmation that the industrials are probably going to continue to well, from maybe at some point, either today or tomorrow, or maybe in the future here, they're going to go into the leading quadrant, and the composite's going to go into the lagging one. So the spread should go higher. And then when the Dow drops out of the leading quadrant into the weakening quadrant, then it's time for the NASDAQ to go into the improving quadrant, and then we're going to have the spread decline. So very interesting stuff. All right. Norgas, Dave, no trade in the SPX-ES. I'm not sure what you mean.
Oh, we just haven't been talking about watching the charts, so.
Oh, okay. Yeah, looks like we got a snapback today based on Market Timer spreadsheet last night. Shows that there's a potential for a snapback. And we're certainly seeing something here. We're up 23 on the cash index, up 118 on the NASDAQ now.
1.5%.
And the Dow is up 222 points. We got the snapback.
Look at this volume.
Pretty strong, unbelievable. And that's on a 10-minute chart. Typically, the top of that is like 2, and now we're at like 30. It's like, it's crazy. Oh, that's the Dow. The Dow's a little bit higher.
Yeah, the Dow has a lot more, but it's still way more than normal.
Oh, yeah. Yeah. You can see where the oscillator crossed, the real-time oscillator crossed the lower one. Nice long position right there. V says, after putting closing price of NDX and Dow, the columns on my sheet are not getting auto-populated. Anybody help me with that? Yeah, so I think you had a question too, Dan, about auto-populating, or not auto-populating, but dragging those columns down.
Yeah, I think that's the trick on where fun happens that I was going to work with you on. Is let me scroll down, get to the bottom here again. So here's what happens. Is right now we're through line 1165, right? So we're all hunky-dory.
Right.
The magic's going to be I need to find out what you do to make these go farther down, because I've tested like just dragging this.
Oh, no, don't do that. No, don't do that. Okay, so what you got to do is go to the 1165, which is the line number, the row number, and then drag that down, but don't go all the way across. So just take that and drag that down. Yep.
Oh, okay. Interesting.
Yep, and then just let go. It didn't do anything.
Or not.
Wait a minute. How did I do this? I got to figure out how I do it. Hold on a second.
Maybe I have to hold it.
Because I do it all the time. What the heck? I do this all the time, and now that you've asked me how to do it, I can't do it.
Nice job, Eric.
Yeah, he's got me.
Oh, and he is sitting pretty.
Okay, I got it. All right. I think that's right. I got to do it on the other spreadsheet just to confirm that I've done it.
Because that has happened before a few months ago when we had that. And I'm like, Dave, my sheet's broke again. And you sent me another one. It's like, I need to ask Dave exactly what he does when these run out.
Lieutenant Torres says, I went long ES as soon as the sin following line made a cross. Beautiful. Nice.
I'm assuming you took it about right here. About 10 after 10 your time? Or, yep, okay, perfect. Yeah, that's, I'd say you're definitely right on. I would probably cashed out as well, seeing this diminishing volume. Nice work. Nice work.
This is absolutely ridiculous. Okay, now I know what I do.
This is $1 million question right here.
I know. It's like it's almost like, you know, those famous tennis coach who was let me just make sure I got this right.
Oh, maybe it's because I'm read only right now. Why is it read only? Let me make a change. Stand by.
Okay. Here's what you do. And go back over, go over to the left. And now go to 1165 again. Did you drag those down already or no?
I think I might know what it is. Hang tight 1 second. Save as desktop, blah, blah, blah. Let's go. Copy YM, that's fine. So if I go 1159, well, not 1159, 1165. Nope, that's not it. Okay, I'll unpause. All right, what you got for me? I tried one thing because I was in read-only mode in Excel, but that wasn't it.
Okay, so go to 1165 and drag that down. Just straight down.
Meaning I hover over what area?
Just stay over the row number.
So I got the arrow showing up right now.
Yep, and then just drag that down. Arrow, either arrow or the cross. All right, wherever you want to stop, so you can see what you're doing. There you go. Okay. Now go up to File. Oh, your spreadsheet's not the same as mine. That's interesting. Go to Edit then.
What function are you going for?
Go to Edit. Do you have an Edit tab?
Better not be some funky Apple thing that I don't have.
No, you should have it. Go to
what are you trying to do?
An Edit tab. There's a fill down function.
Okay.
And how
about right here?
Yeah, there it is. Fill down. That's all you got to do. That's it.
Okay. I know he's got an Apple Voltaire. He's weird.
Yeah, so I've got that in a separate. You might be able to set it up on yours as a.
So your fill down is just somewhere else.
As a tab or something like that. Yeah, my fill down is someplace else. But that's exactly what you want to do. You want to drag down those column numbers and then go fill down, and then it'll automatically populate all of the cells with the exact same formulas. So when you update the Dow, date, and NDX columns, it'll automatically populate all the fields.
You mean to like drag and drop or drag it down, David? That's what I tried with this one.
Yeah, that does not work. No, it does not work. You need to do the fill down.
So that's the key right there, guys. So I'm sure I'll answer this in another 2 months whenever it comes out. But
although David says that there might be, there's two kinds of squares. There's crosses. No, not that one. There's another one. Yeah, the black one. No. That's a row height. That one right
Yeah,
there.
that's the one that I've tried because that's the same one you use if you just want to do a regular roll, like
Yes, if you just want to do
problems
exact.
like that you can drag down.
Yes, but in this case, you want to be able to you want to copy all the formulas into each one of the cells for the entire spreadsheet. So in order to do that, you need to use the fill down.
I'm just going to use the fill down.
Yeah, that's the safest way to do it. Absolutely.
So there's the trick for everybody.
Yep, that's it. So on Dan's sheet, you have to go over to the home tab and then go to the fill down tab there. If you're on a Mac or you're using the Mac version of the spreadsheet, it's under the edit tab. Go to edit and then down fill down.
Awesome. Now we can go back and fix everybody.
Well, time is flying. We have 3 minutes left, guys. Do we have any final questions? Otherwise, we will wrap it up for today. And Dan, I'm sure we'll get this the fixed spreadsheet back up on the.
Yep, absolutely. I'll update those today, guys.
Yep.
Yeah, that's the one thing I'm not sure exactly what happened to that one, Eric. Why mine said a different one from yesterday. It's amazing how many hidden cells Mr. Bellier has in that spreadsheet.
Yeah. If you ever unhide them, be prepared for an accordion type experience.
Right.
I am going to work on those, though. Actually, I'm going to work on all the spreadsheets and try to eliminate, because what I did was I took the total market spreadsheet and I used it, I modified it in order to do it for just the YMNQ. So I'm going to work on that probably this weekend. There's a couple things I need to clean up. I'm going to create a brand new spreadsheet with clean lines and no hidden cells so that we won't have this issue in the future.
Let me know if you want help on that.
Sure. It should be fairly straightforward and simple.
Okay.
But yeah, if I need help, I appreciate the offer. All right, guys. Any final questions? Otherwise, we're going to wrap it up for the day.
And just a quick heads up for August, if anyone's typing, we'll grab it. But welcome to August, by the way, August 1st, right? It's almost time for school. Some places school's starting, but second half, I will be on a long trip. So we're going to do 2 weeks of trading room. And then the second 2 weeks of August will be off. The new truck is fantastic. That's why we're taking it on a big trip up into Canada.
Oh, beautiful.
So looking at the calendar, we'll have trading rooms this week and this week. And then I'm leaving this day. So I will be out last 2 weeks.
Gotcha.
So just a heads up on that.
Enjoy. You're just going to kind of jump from place to place, doing some camping and sightseeing, or you got a destination?
We're doing 4 or 5, or we're doing one night each place, maybe 250 miles each day. We're not going to do anything crazy. Staying at one campsite on the way out to Glacier National Park in northern Montana. Then we're going to stay in that park for about 4 nights. And then we're going to head up to Banff National Park up in Canada. We're going to stay up there for another 4 nights. And then we're going to do the reverse all the way back, just drive for about 300 miles a day and stay in a campsite. We got them all planned out. Everything's all reserved for 2 weeks straight of camping. So it's going to be fantastic.
Nice. Sounds great.
So I'm really looking forward to this because last year we did one where we had to do like 600 miles one day. It was like, this is just too much.
Yeah, wow. That's a lot.
Yeah, when you're hauling this. Yeah. V, that is the perfect email if you got questions about Tradingology and the courses. If people have questions about the scripts, that's always strong market. Support at either one. Absolutely. Yeah, Greg, I'm curious, where'd you go in Canada? You did some camping and fish. Maybe I'm going to follow in your tracks.
Beautiful.
Yeah. More live trades of swing trades. Well, you record yours in New Rug and we'll compare. That's the fun part is it's almost boring recording swing trades, right? Because you have to do a clip and you have to do another clip later. But I have done it a couple times, so if we get a chance, we'll definitely do it as much as possible. I know, is David still on? Yeah, David's been literally a machine. And he's shared a few things maybe I'll put together for you guys and put it in an email. He's
Yeah.
even found that he's crushing it on the overnights. So he's even using these at off hours. David's going to be our new resident training expert.
Awesome. Nice. Yeah, he's really burning up the screens here.
Ontario, very cool.
Doing a nice job. Dow's up 270. Finish off. Here's the snapback we were talking about yesterday in Market Timer. So yeah, looks like we're right back where we were before the Fed announcement, just about on the Dow, NDX, and on the S&P 500. Crazy, guys. Absolutely.
Just take it both ways. Ridiculous.
Yep. All right, guys. Anurg, have a great day. Craig, be awesome to see you guys. Thank you very much. Eric, Lieutenant Torres, absolutely pleasure to see you in here. David L., absolutely. Nice to see you guys. Voltaire, awesome, man. Glad you can make it. You're very welcome. And I will see you at 3 p.m. today.
Sounds good, Dave. You guys have a good weekend.
See you, Dan.
Later.